And we are back live with the end of day pulse wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from pulsewavetrading.com, home of the world famous pulse wave price trigger reports. As you already know by now, we had the FOMC today, and the Fed raised interest rates another quarter basis point. So, inching closer, not no longer at zero, but still not so far away from zero either. The talk now is, where do we go from here? How much more aggressive will the Fed be at raising these interest rates? Now, keep in mind, it's a delicate balancing act because we already have inflation peeping around and starting to become more hostile. So if you risk cutting off the wrist, cutting off the hand, slicing at the wrist, and if you take away the hands, then you really can't really do the things that you want to do. You can't reach out and grab onto other lifelines once you cut the hands off. And that's where we are right now. So the question is, with the rising cost of food and energy, you can no longer deny inflation. Inflation is here, and the people of Earth are dealing with it. It's not just in limited locations; it's everywhere. And of course, those that live in the U.S. are thinking about their neck of the woods. So, yeah, we have scarcity, we have shortages on top of scarcity, and now we have war. And like I said before, I told you one of my predictions for 2022 was laying the foundations for World War III. And that's exactly what you see happening. So, in a nutshell, what is World War III? World War III is a mad dash for natural resources. All right. So, you only have a finite amount of natural resources. So, the push is, who is going to control those natural resources? And then, while you're dealing with that issue, the other issue is the US maintaining its world superpower status. And that is now in jeopardy. And of course, those in power never like to lose power or relinquish power. So the US is trying to hold on to that power, doesn't want to give it up, and at the same time, making sure that the petrol dollar remains the currency king and remains the store of value, remaining the world reserve currency status. So these are very crucial issues that the US is facing. Now, you would think that the US has a bunch of tools at its disposal, but that is not necessarily the case either. And we're going to take a look at that right now. So the first chart that we're going to look at right now, we're going to look at ADA Cardano on the daily chart. So as you can see here, this market has been leveling off. The momentum is almost zero. And you got a little tiny slither of a pop. You had a rally alert coming into today's trading, and you got a little bit of a little pop right here. The market's trying to do something, but it has a long way to go. And it's still under selling pressure, primarily because of the bearish pointer from February the 24th. So keep that in mind, those of you that are holding the Cardanos. Switching to EOS. All right, EOS came into this trading session with the rally alert as well, and you got that lift off. You got that initial upside production. The overhead trend line resistance around the $2.40 mark, somewhere between that 240, 250. That's where you're going to start to see the real resistance come into the market. But right now you got at least the beginning workings of positive momentum entering the market. The next one we're going to look at now is Litecoin. So Litecoin also came into today with a rally alert, and you got that upside production. The overhead trendline resistance around the 120 area is the initial target for this upside movement. And just keep in mind, if you fail up here, this bearish pointer back here from February the 24th is just waiting. All right, so keep that in mind. Next, we have here Theta. All right, so here's your Theta. Theta came into today with a rally alert as well. And you can see the market did get a little bit of uplift, but it's right at a resistance point right now. And as long as it can get, above that $3 mark, then the overhead trendline resistance around the 350 area is definitely an upside target. But having to overcome a lot of selling, as you can see here, this red line is extending out. There is still a lot of selling pressure in these markets. All right, next up is Xrp Ripple. And as you can see here on Xrp Ripple, this market has been operating under the auspices of a crash alert, and the market's moving sideways with a slightly bearish bent to it. There is some buying that's starting to come in here. As you can see, this green line extending out. And you're also inside the Kumo cloud, but you're in jeopardy of falling outside the cloud and falling. So this is a very interesting one as well. We'll see what happens. Okay, next up is Ethereum. Here's what the Ethereum is looking like. This is on the future side. You can see here, this market came into today with a rally alert. We did get that initial upside production, and now we're looking for a continuation for tonight into tomorrow's trading. We're almost at overhead objective, the first objective. The next objective will be between the 2,900 and the 3,000. That will put you right in the center of the Kumo cloud. So that's what we're looking at right now. Market's trying to overcome all of the selling pressure here at this resistance zone, but you do have some buying starting to enter into the market. All right, next up is Bitcoin. Here's the Bitcoin futures right now. All right, so this one now has a crash alert for tonight into tomorrow's trading. You're still inside of the Kumo cloud, as you see, and you still have some selling pressure that the market's trying to contend with. It's a very interesting type of a pattern because you came down and you tested the bottom of the Kumo cloud, then you bounced up. Now you're mid cloud, but you're right at the overhead trendline resistance, so you're right there. But at the same token, you are still below your top of the Kumo cloud, which is at 45,000. So right here, I would say this 40,000 psychological resistance zone, that's where the market's testing right now. The next upside target will be 45,000, but I think the bears are keeping all of these intraday rallies at bay and keeping them in check. So I don't think the market is going to let that fly right now. You see this selling pressure starting to creep back in at this juncture too. Every type of an uptick you see is followed by selling pressure. We cannot ignore that. But now let's take a look at the Petrol Dollar. Here's the US dollar index. So you can see here, this one too, it's still, the bears are still keeping the dollar in check. All right, not letting it get to par. So it's going to take a lot of bullish momentum to come in to give the market enough energy to push it into par. You can see here the buying pressure has dropped off. That's why you got this sideways pattern. The buying has, for the time being, has now dropped off. The question is, are the bears going to re-enter the market here? and drive the market down back to a more reasonable handle, maybe the 97 or 96 handle. That remains to be seen, but you are in the red zone, even though you're not getting the follow through downside yet. So you got to keep that in mind. All right, next up we have here wheat. So wheat was limit down today. Yep, lock limit down, as you can see here. The bears are keeping wheat in check for the time being, and you have increasing selling pressure here. I think the market's going to come down here and test sub 950 because of the gap up on March the 1st. So I think this market has some more downside to come before things start to settle down a bit. So we'll see what happens on that one. And euro, let's look at the euro currency real quick. Okay, so as you can see here, the euro is still right now trying to get back up to the overhead trend line resistance of that 112 area, but now the bullishness has dropped off for the time being, so maybe losing some momentum up here, as it's a possibility that this could be a target now for the bears to come back in and push the price action right back down again. So for right now, you're in the green zone. The bulls are keeping it, floating, trying to get an uptrend channel going here, but you do see the buying kind of leveled off today. They'll need to relock back in tomorrow if we're going to see some follow through into next week with the potential of more upside. All right, here's what the metals are looking like now. We have the inflation issue on the table, but gold is going the opposite direction. It's headed toward dropping below 1900, like I was warning you that was a possibility, because you did gap up here on February the 17th. So that means you're going to have to drop back into the mid 1800s in order to close that gap. And you also have a gap down here that you just did. So at some point, this gap and this gap here up here will have to be reconciled. But for now, the initial downside target is 1880-ish, somewhere around there. So we can't ignore that. And we have increasing selling pressure as the market is entering now. It's going full-blown correction on you, not just a little pullback, but full-blown correction. It did move quite a ways from this trend line. So when you see the market pull away like that, it's only natural that it comes back and fills in some of that. All right, so last but not least, let's take a look now at silver real quick, if I can find. Here it is. Okay, here's silver. All right, so silver also moving down at this point. It's already closed the gap that it made on March the 1st. So that's good. That's a good thing. The trend line here is right below the 2250 handle, so it doesn't have too much further to go, but we cannot ignore the gap that was created on February the 7th, which is all the way down here at the $21 handle. So you have a possible $2 downside run potential brewing here in silver that cannot be ignored. Yeah, I was just thinking that to myself. When I say last but not least, I was like, hey, it's not last. Oil is last. So you're right. All right. So last but not least is oil. Got to look at the oil. All right. The black gold. Here we go. Oil, and it's interesting that oil and the metals are moving together. Oil, gold, and silver, the same chart pattern. Have you noticed that? Have you noticed that? It's the same thing. So you hit trend line support for the second day in a row on oil. So the downside objective has now been satisfied and met. The next question is, are the bulls going to come in here at some point and defend here, or are the bears going to win out and push it down to the top of the Kumo cloud, or even inside of the Kumo cloud? Because you can see the selling pressure is extending. It's picking up. You're now full-blown correction mode, and it's in jeopardy and in danger now of turning into a full-on bear market. You are in the red zone. You already have the bear here. You are technically in a bear market, but is it going to become more mature? That's the question. Or can the bulls come in here and defend? That is the question. Yeah, you're right, man. It is the most gangster market on the planet. That oil, they do you dirty. They do you dirty. It has done the most. All right. Actually, that's not going to be my last chart. I forgot. We got to look at the equity market real quick. I want to pull up that Nasdaq. I want to show you something on that real quick because this is also concerning. Let me just go back to the dollar first real quick. I want to see something. Okay, yeah. So the dollar pattern is not like oil and gold and silver, but still in a bearish position. So I find that also interesting. Oh, here we go. Here's bonds. I forgot bonds. All right, so here's what the TLT did today. So it staged a rally on the announcement, as you can see, closing near the top of the session, near the highs of the session. But we got a problem. This is the third new low in a row, new weekly low in a row, and you made a bearish pointer on the day. So this was just an attempt to backfill the gap down that happened on March the 14th, and you didn't quite do it. Didn't quite get there. So we could have another day up or maybe even a spike day up, and then we crash tomorrow on a spike up on the open because this gap needs to be dealt with at some point. And so there's this one back up in here. So even if this low stands in the next several days, we go up, up, up and back and fill these gaps here. At some point, this bearish pointer has to be tested. So interest rates, even if we get a little reprieve, it's still going to come back down here, which means rates will go back up again. So, yeah, I know. Wash, rinse, repeat, but these are facts. All right, last chart of the evening, the Nasdaq 100. We came into today with a rally alert, and we got upside production in a big way. Now you're right at resistance. Overhead trend line target, though, is just shy of the 14,500 mark. So the question is now, can the bulls get some more follow through before the bears come in and do this and do this and do this and do this? That's what we want to see. Is the bear market over now for the Nasdaq? And is this the beginning of a bull market? This remains to be seen. It's going to be an interesting ride, ladies and gentlemen. All right, that's all I got for you tonight. Just wanted to let you see how the market settled because, you know, that's a really big deal when you have an FOMC day. It's not necessarily the market's reaction to the news. It's how the market closes. So with that being said, smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.